Hello and welcome to the look ahead for Thursday, the 27th of June with me, Fiona Cincotta, Senior Market Analyst at City Index. So we'll be looking at tomorrow in the European session, Eurozone economic sentiment. Also, the UK financial stability report will be released. And then in the US, we'll be getting durable goods orders, jobless claims, GDP, and also home sales data. So just focusing on what's going on in the US tomorrow, we're, as I said, expecting, I think jobless claims will be very much in focus, given that they're expected to remain close to that 9-month high reached the other week of 242,000. We're expecting jobless claims to ease just very slightly to 236,000, down from 238,000. As far as durable goods orders are concerned, they're expected to rise at a slower pace as well of 0.1% after rising 0.4% previously. And then GDP data, this is for Q1. It is not the preliminary reading. I think it's the third reading. So tends to be less market moving than the preliminary readings. Expected to confirm growth of 1.3% annualized in the first quarter of this year. And the PCE reading will also be in focus there, which is the expected at 3.3%. I think broadly speaking, if we get a sense that the US economy is holding up well, then that could be more fuel for dollar bulls. I mean, if we just have a look here, this is the dollar index chart, and we see it's been rising quite firmly. The latest uptick today comes after Fed Governor Michelle Bowman actually warned that the Fed might not need to cut interest rates at all this year, and that actually a rate hike could remain on the table. So if we get this sense that the US economy is really holding up well, obviously we've got Friday's inflation data, which will be key to deciding really whether the Fed will be cutting interest rates anytime soon. So at the moment, this is the US dollar index. I said it's just testing that 106 level at the moment. If we get a rise above there, well, we have had a rise above 106, just brings 106.50 into focus. That's the May high. I think there is more room on the upside. The chart is pointing to that with the RSI above 50, as well as that strong bullish candle today. As far as support is concerned, 106, that's the level on the downside. Below that, I'd be watching out for 105 really on the downside after that. Just whilst we're talking about the US dollar, I think we're going to have to be keeping our eyes on the US dollar Japanese yen. Obviously, that has pushed above that 160 level. That's on the back of Fed Bank of Japan divergence, which has really seen this trade grind higher after intervention or suspected interventions earlier in the year in around May time from the Japanese authorities. Now we're back above that 160 level, which technically puts us back into that level where Japanese authorities could intervene. Now, we did have another verbal warning again today. The fact that they're still warning suggests that maybe they're not ready to intervene just yet. But still, I think basically, as far as technicalities are concerned, the USD Japanese yen is trading at this highest level since 1986. Above here, it's, technically blue skies. This is actually quite a psychological trade right now. How far will the Japanese authorities let the yen depreciate before stepping in? Just as far as support is concerned on the downside, watch out for 158.75. That's the weekly low. And below that, you've got 158, which is the May low. But, if we do suspect some intervention, then we could see quite a lot of volatility in that currency pair. So also be watching, this is the Dow Jones. Now, the Dow hasn't obviously seen the spectacular performance that we've seen from the S&P 500 and the NASDAQ in recent sessions, with those all-time highs reached last week, still struggling really well below 40,000, its peak level. Actually just testing this 39,000 level, which is offering support at the moment. I mean, technically, if we do see a break below the 39,000, then this position might start to look a little bit less bullish, and the support comes in then around the 38,800, which is the 100 SMA, and then below that 38,500. On the upside, buyers, if we see this 39,000 level hold, then buyers will be looking to break above the 39,600 level. That's the June high, in order to step towards the 40,000. Just finally, we also have the European data, economic sentiment out from the Eurozone, expected to come in a little bit better, slightly improved at 96.4, I think up from 96. But you know what? I think, we can see here that the US dollar, the euro is struggling. I mean, not only have we got sort of these political concerns ahead of the French election at the weekend, where the market is fretting over the far right coming into power with large spending plans, which could push French debt levels to dangerous, push French debt levels higher. Also, we've seen weaker than expected data from Germany this week, weaker than expected consumer confidence, weaker than expected business morale. So, these are all things that are making or raising concerns over the economic recovery in the Eurozone's largest economy. And then you've also got the US dollar strength. So, I think there are quite a few reasons that we've seen the euro come under pressure and may struggle to push higher, at least in the near term. Levels to be watching out for: it's below that 107 level at the moment. Below there, we've got the 106.80 level, which is testing, or it has been testing recently. That's the weekly low. Below that, 106 comes back into focus. I think the downtrend would support the bears, especially if we get a break below that 106.80 level. And then on the upside, if we find that we can get above 107, then any recovery will then be looking to the 200 SMA, which is in at 107.85. So I hope you like what you have seen, and if you do, then please do give this video a like, and if you would like to see more like this, then please do subscribe.